Welcome to The Explainer. Today, we are breaking down India's 2026 union budget. And we're not just going to skim the headlines. We're going to dig into the fine print and figure out what this all really means for your wallet, your investments, and, well, your future. So, leading up to Budget Day, everybody was talking about one thing: income tax. After last year's big changes, millions of us in the middle class were kind of holding our breath, hoping for another round of relief that would put a little more cash back in our pockets. Especially with how much everything costs these days. But then the big announcement dropped, the one that got all the initial attention, and it was this. For both the old and the new tax regimes, the slabs are staying exactly the same. No changes. At all. And look, that news can feel pretty disappointing, right? Especially when you think about this quote. For so many families in our cities, just keeping your head above water, paying the rent, covering daily expenses, it feels like that's the whole game now. The dream of getting ahead has been replaced by the fear of falling behind. So that brings us to the big question, doesn't it? If that major tax relief everyone was hoping for didn't happen, was this whole budget just a dud? Or is the real story, the stuff that actually matters, hidden a little deeper in the details? Let's dive in and find out. First things first, let's just quickly get that big headline out of the way and understand the context before we move on to the more interesting bits. So, the finance minister made it clear, both tax systems are here to stay. That means we all still have to make that same tough choice. Do you stick with the old regime with its higher rates, but also those really valuable deductions like ADC and HRA? Or do you jump over to the new regime, which offers lower tax rates, but takes away most of those breaks? The choice is still yours. Okay, but here's where the story really starts to get interesting. Because even though the big tax slabs didn't change, the government rolled out a whole bunch of smaller, very specific measures. Now, these weren't headline grabbers, but they were aimed squarely at easing some very real financial pain points. So are you planning a trip abroad? Or maybe sending your kid overseas for their education? Well, that big upfront tax you had to pay, the tax collected at source, or TCS, has been slashed. It's down from crazy high rates of 20% to a much more manageable flat 2%. That means less of your money is stuck with the taxman when you need it most. And here's another one that puts money directly back in your pocket if you travel internationally. They've cut the customs duty on personal goods you bring back into India by a whopping 50%. I mean, that could save you hundreds, maybe even thousands of rupees, making that shopping you do on vacation feel a whole lot better. Ever made a mistake on your tax return? Yeah, we've all been there. Well, the good news is you've now got way more breathing room to fix it. The deadline to file a revised return has been pushed from December 31st all the way to March 31st. That's a huge relief. And, when you look at all these other changes together, you start to see a real pattern emerging. It's all about simplification. It's about making things less of a headache, whether it's a one-time window for students to declare small foreign assets or making it easier for NRIs to sell property. The goal seems to be cutting down on the hassle. All right, so the budget didn't just focus on our day-to-day finances. It also zoomed out to look at the bigger picture of investment in India. And these moves are all about making the Indian market more attractive, fitting into that long-term vision of a Viksit Bharat, or a developed India. Now, for anyone who invests in the stock market, this is huge, a really big deal. From now on, when a company buys back its own shares, the money you get from that will be taxed as capital gains, not as dividend income. Why does that matter? Well, it's a much friendlier tax treatment because it lets you factor in how much you paid for the shares in the first place. Bottom line, it means higher post-tax returns for you. And to get more foreign money flowing into the market, the government has literally doubled the investment limit for individual overseas investors in a single Indian company. They've bumped it up from 5% all the way to 10%. But it wasn't all good news for market players. If you're an active trader, especially in derivatives, your costs are going up. The Securities Transaction Tax, or STT, on futures and options has been hiked pretty significantly. This seems like a clear signal that they want to cool down some of the wild speculation we've been seeing. Okay, let's shift gears because what we're about to talk about might be one of the biggest, most important stories of this entire budget. And that is a massive renewed focus on healthcare as a cornerstone of India's growth. For the first time in Indian history, ever, the national healthcare budget has crossed the 1 lakh crore rupee mark.
That is a gigantic number, and the 10% jump sends a really powerful message about where the priorities are shifting.
So the big question is, where's all that money actually going? Well, it looks like there's a clear four-part strategy. They're boosting mental health services, expanding emergency and trauma care across the country, giving immediate relief by making 17 critical cancer drugs duty-free, and also promoting traditional medicine. It's a really comprehensive push. All right, so we've talked taxes, we've talked investments, and we've talked about this huge bet on healthcare. So what's the big takeaway from all this? What's the real story? Let's try and connect all the dots. Look, if you were waiting for that one massive, headline-grabbing tax cut, this just wasn't your budget. But that seems to have been the whole point. Instead of one big splash, this budget delivered a whole series of smaller, smarter fixes. The idea seems to be to solve specific, nagging problems for individuals, for investors, and for the country's health. And that leaves us with one final thought to chew on. In an economy where a lot of people are craving a little more stability and a few less surprises, is this kind of quiet, problem-solving budget actually the smarter path for India's long-term growth? That's the big question this budget leaves us with.